Hello, good morning. It's Tuesday, March 12th. It's Brexit Day, and the year-long dilemma that we've seen in this and uncertainty that we've seen may come to a potential conclusion today, but all remains to be seen. But we did see a jump in sterling last night and overnight. Last night in Brussels, Theresa May managed to get some concessions from the EU, and sterling spiked high on that. Basically, she needs to win over more than 100 Eurosceptics, and yesterday's deal could potentially pave the way for that. But it remains to be seen. As you can see in the chart here, Sterling has been rising higher for the past couple of days. If you look at the chart, which we can't show you at this stage, we basically have seen the market spike higher the last couple of days. We are still sitting below this 133.10 level, which has been providing some resistance in recent months. But it really is a binary outcome, and I suggest you take a look at home.saxo, where John Hardy will put up make an update this morning where this basically go into the details of what was agreed last night. And as he also mentioned in his update, we could be looking at 135 tomorrow, or potentially be heading towards 125. So really quite a bit of a binary outcome of the vote tonight. So that will attract most of the attention today. Elsewhere, we saw stock markets push higher yesterday. It was the technology sector that drove the market. We saw the Nasdaq once again toying with its recent highs. It was several news. We had Nvidia announcing a merger, or buying one of the other tech companies called Mellanox. But also we had an upgrade in our buy recommendation from Bank of America, which basically said that they came out with a note saying 10 reasons to be bullish on Apple, and Apple responded. The stock responded by moving up to the highest in 3 months. There are several key things in this note that I mentioned. They said the valuation was getting attractive. It had overshot to the downside in terms of negative earning estimates. They were seeing a growing base of users, a very loyal user base, but also a large reversal of the recent inventory built in iPhone. So all supporting the move up in Apple. If we move to some of the commodities, gold has been enjoying the weaker dollar that has come with this renewed risk appetite, especially due to the strong sterling. We've seen some dollar weakness that's supporting gold. We're still holding below the 1300 level. We really need to break above that, and I would say 1306 before we start to see any renewed bids come into the market. As I mentioned yesterday, hedge funds have been thrown around the market recently by getting too overexcited to the upside when we were breaking higher, and now after last week moved to the downside, there was a lot of selling. So market is confused at this stage. So I think with this stage that we need to see it break above 1306 before the market starts to stabilize. Oil, meanwhile, we've seen the market trade higher over the past couple of days. It remains stuck still. If you look at Brent crude in the $64 to $68 range. This week the focus will be on Houston, where we have the annual CERA week, which is basically where a lot of oil executives, they come together to discuss the outlook for oil going forward. But the support overnight has come from continued drop in supplies from Venezuela. Also Saudi Arabia signaled they want to continue to cut supplies, and that is providing some support. But overall, chart-wise, still $64, $68 range. And then something like copper, where we've been looking for a deeper correction recently, potential signs that we may have seen most of that already. We did fail to break below the recent highs, which has been established since last August, and we are trading a bit higher now with the renewed risk appetite. Still focus on dwindling stocks in LME stocks primarily, which is at a multi-year low, and also some talk that we are going to see a shortfall in supplies over the coming years. If we I just lost my screen here. So here we go, it's back. Sorry about that. Just before we move to the calendar, because again, apologize, we can't show any charts today. We are just taking a look at the grain market. If you look at my cut report, which was out on home.saxo yesterday, I mentioned that we've seen the net long across the three major crops of corn, wheat and soybeans drop to the lows for this time of year since 2016. And as we all know, it's always darkest just before dawn. But at this stage, the bearishness that's attracting sellers has not seen any reason to be reversed. But we just have to keep focused on there's a rising short in the market. So any change in the technical or the fundamental outlook could trigger a reaction to the upside. But we keep an eye on that. And then just finally, the calendar today, we have quite a bit of numbers before the vote in the UK Parliament this afternoon or this evening. We got trade balance, manufacturing production, and we got also some growth estimates. The UK is expected to bounce back into positive growth, and that could obviously send a little bit of a relief through the market. Later this afternoon, we got CPI from the US, and then towards the end of the day, we have the monthly short-term energy outlook from the US EIA. And following the recent downgrade in growth from the OECD, the market may be looking out for any potential change in their outlook for demand heading deeper into 2019. Right, once again, apologize for not being able to show the charts. We will be back again same time tomorrow, and stay focused on the Brexit. It could be, as I mentioned, it could be a binary outcome of sterling as we move towards the end of the day. Thank you very much.